Hello, today we're going to be going over SOFI Q4 earnings. We follow SOFI. As you can see here, there's a lot of good results, a lot of good numbers. Their fourth quarter, 615 million net revenues, up 35% year over year. Adjusted net revenue, 594, 34% year over year. So we're right around that 34% growth rate still, even considering last quarter. Record numbers as always. Their quarterly ads with new members, new products, as you can see, up 44% and 41% respectively year over year. Their deposit growth was up of 2.9 billion. They even grew their tangible book value 204 million, up 334 million for the full year 2023. So as you can see, they're doing a great job. They're continuing to feel that growth. You can come look at their numbers. This is their press release. You can just look at it. It will show you other things, key margins, how, financial achievement in one quarter, including positive GAAP net income of 47.9 million or 0.02 per share. This is huge because this is the first time that this has happened for SoFi. That means they are now profitable. And, that's what we're going to want to continue to see going forward. They're up huge today in the market, which is as expected, with results like that. We were expecting to be profitable in 2024, but it's pretty impressive that they just managed to be profitable the last quarter of 2023. So that's really good. We'll see how things go when interest rates declines. Those are things we're going to have to look out for. I wonder how much that'll hurt their growth. But we're going to continue to calculate that growth at what they're currently at right now. As we're just flipping through here, these numbers, it's just going to show you like, personal loans, mortgages, where their money's coming from, stuff like that. You can listen to the earnings cast. We were just flipping through here just so you can see, a quick little update of Q4 earnings. We're not going to go through the whole earnings today, just a little update to see where we're at. So we're going to go over here. This is 5% of their revenue, 132. 34% growth rate, 10% discount rate, 951 outstanding shares, a discounted cash flow price of 17.54, and then if we give ourselves a 20% discount rate, it's at 14.03. So as you can see, SoFi would currently be undervalued if we're going to continue to grow at this rate. But if let's just say it drops down a little bit to like a 30% growth rate, let's just see how much it changes the number. As you can see, it significantly drops just by 4 percentage points in that growth rate. So it's really going to depend on how SoFi grows. If they continue to show tremendous growth, then they're really undervalued. But if growth does start to slow down, then we're starting to see that SoFi may be potentially, fairly valued. Because if their growth rate dropped to like 20%, as you can see here, it drops this number significantly. But currently, with the growth rate, if they continue to grow this much, then they are really undervalued. I continue to invest in SoFi. I really believe in them. These are really conservative free cash flow numbers. As you can know, this is based upon free cash flow. Now that they're going to be free cash flow positive, that's going to change how we're starting to value SoFi because free cash flow is king. So if they're having a lot better numbers at 132, like coming in, if SoFi starts to be like, all right, so we're bringing in this, and then let's just say that they have all that free cash flow, they're not growing as much, it drops to 20%. As you can see, these numbers are going to change significantly. So it's really going to depend on how they are growing their business, their revenue, and how much free cash flow they are bringing back into the company. So, currently we're looking at a 20% discount rate, so 14.03. So we're still significantly undervalued. I'm going to continue to buy SoFi, sell calls, and sell secured puts. I'm going to continue to keep doing this until SoFi shows me that they aren't worth it or that they no longer continue to grow.